Convert IRAs and 401ks to tax-free. Many times I've been asked the question, can I convert my tax-deferred IRAs or 401ks to a tax-free strategy? Actually, I've written articles about this, and now's the time to convert your IRAs or 401ks to better plans. In this episode, you're going to understand why. I'm Doug Andrew, and I've been a tax strategist for 47 years, helping people convert their IRAs or 401ks to better plans, especially at retirement, because many people have been sort of creating a tax trap by deferring taxes until they retire, because they thought they were going to be in a lower tax bracket. So yes, you can convert to a tax-free strategy, but not without incurring the tax, or at least subjecting the money that's in your IRAs and 401ks to tax on your 1040 tax return. But then you can reposition that money into something that's going to be tax-free from now on. In fact, I've helped many people withdraw $40,000, $50,000, $60,000, $70,000 a year out of their IRAs or 401ks, not necessarily to live on it, but to get the taxes over and done with sooner than later, rather than thinking that you're going to be in a lower bracket or save taxes by stringing it out. So I'm going to give you some examples right now of people that we've actually helped. We have taken from the highest tax bracket to a 0% tax bracket in 5 short years. So many times when I helped my own clients, because I helped many clients for over 35 years reduce the amount of tax on their tax-deferred IRAs or 401ks and get the money out and repositioned into vehicles that would be tax-free the rest of their life. And I saved them tons of money of unnecessary tax. But in order to do that, you have to strategically plan based upon your income and tax thresholds. So for example, I remember years ago, there was a couple that I said, you know what, you've got $57,000 of room between, at the time, a 28% tax bracket and a 33% bracket. But you know, you are in a 25% going to a 28, that's only 3% more. And so it would behoove you just to pay an extra 3%. Well, they went to their tax preparer. That accountant said, what? This advisor just forced you into a higher bracket. Not really. See, you only have to pay the extra 3% on the money over and above that tax threshold. And so that was about $57,000 of room back then, I remember. And they said, oh no, we don't want to pay an extra 3%. Well, 3% on $57,000 is what, like $1,700. They said, no, we don't want to pay an extra $1,700 of unnecessary tax. I go, well, I hope you won't regret this. Sure enough, the market dropped 40% the next year. That was 2008. They came back and just said, is there any way we can retroactively go back and pull out that $57,000? No, they lost 40% instead of just 3% in taxes. Sometimes we make decisions more emotionally. Oh, I don't want to pay the tax. But then we don't think through it logically, and that's what happened to this couple. And so what you want to do is take the emotion out as much as possible, do a strategic rollout or a conversion from the money that's yet to be taxed in IRAs or 401ks. When? I wouldn't wait till retirement. I would probably start doing this at least 5 years before you retire, because if I had my druthers, I would rather have my money out, the taxes over and done with sooner than later, and then reposition that money into something that's going to be tax-free the rest of my life. So this is what motivated me to write several articles like this one. Now's the time to convert your IRAs and 401ks to better plans while tax rates are lower. See, when I ask audiences, how many of you think taxes in the future are actually going to go down? Nobody raises their hands. A few raise their hands when I say how many think they're going to be the same rates. But the vast majority of people think that taxes in the future will likely be higher because the government is addicted to spending money. So taxes will likely be higher in the future. So why do you want to postpone or delay the inevitable and compound the problem? And so many times I would sit down with people and we would start to convert the yet to be taxed monies, often in IRAs and 401ks, and get the taxes over and done with sooner than later, and then reposition the net after-tax monies into vehicles that will be tax-free from now on. Now, my favorite vehicle that's tax-free is the L.A.S.E.R fund. That's my name for it. It stands for Liquid Asset Safely Earning Returns. But a L.A.S.E.R fund is the only vehicle in the Internal Revenue Code that allows you to accumulate your money tax-free and then be able to access that money tax-free as long as you live, if you live to be 120. And we've actually had clients that have lived well past age 100 and they continue to enjoy tax-free income far longer than if they had left their money in an IRA or 401k. And at the end of the day, when you pass away, it blossoms in value and transfers tax-free. Now, this is called the L.A.S.E.R fund. Technically, it's a maximum funded tax advantaged life insurance contract where it's structured where you're taking the least amount of insurance that the IRS will let you get away with, so to speak, under law, and putting in the most money they will allow as fast as they allow you to fund it. It turns into a cash cow, and I've averaged 10.07% the last 25 years. Over the last 47 years, I've averaged 8.2% tax-free. And people say, what? I've never seen an insurance policy do that. Well, then you've never seen one structured correctly the way that they were originally designed behind the brainchild E.F. Hutton. They weren't a life insurance company. They were a brokerage firm. So when you do a strategic conversion, the first thing that I would do is look at the room that you have in your current tax bracket. If you have room, or even in the next bracket, to get the money out, the tax is over and done with. It doesn't mean you have to live on it, but you take care of the taxes sooner than later in today's lower rates. Number two, you reposition the after-tax money into vehicles, a portfolio. I would prefer a portfolio of L.A.S.E.R funds that are going to be tax-free from now on and actually reimburse you far and above the amount of tax you paid during the rollout process at the end of the day when you pass away. Because a L.A.S.E.R fund will double, triple, leave behind far more when you pass away tax-free. So that reimburses, you're not out anything. But the third part of the strategy in a conversion is to oftentimes offset the tax by creating new deductions or resurrecting deductions that maybe you were killing. So in my various books, I give examples of people we have actually done this for and how we have helped them resurrect deductions on their non-owner occupied rental income real estate by refinancing them, by taking the money out of those properties and putting it to work at double or triple the cost of the mortgage, but resurrecting deductions they had been killing by paying them off. So we not only increase the rate of return, but we bring in or resurrect deductions that they had killed, and that offsets the tax on the strategic rollouts. There are several examples of how we have done this, and I've helped people withdraw money and save $250,000 of unnecessary tax. We've saved many couples $500,000 and $600,000. We saved one couple $1.2 million. But we have taken many people from the highest tax bracket, and they were headed to be in the highest bracket the rest of their life, and in 5 short years, we change them to a 0% tax bracket. Now, I can't do that for everybody, but if this is intriguing you, I want you to understand how you can learn and read stories and examples of how to do a strategic conversion. So this is what motivated me to share many stories and examples in the various books that I've written. My most recent book that outlines this is called the L.A.S.E.R Fund, my favorite vehicle. But this side of the book actually has all the charts and graphs and quotes the Internal Revenue Code and how this is tax-free. But this is one of my favorite parts. This book is, you flip the book over, and it's about 100 pages comprised of 12 chapters. And there's one chapter in here on how to do strategic conversions or strategic rollouts, and it shares stories of actual clients where we have taken their money out of their tax-deferred IRAs or 401ks strategically, converted it to tax-free strategies, and they've never been happier. One of my favorite is a couple that had $200,000 of income. About $160,000 of it was coming from tax-deferred IRAs or 401ks. They were being taxed to death on that. Only about $40,000 of that $200,000 was Social Security income. In 5 short years, we changed their income where they still had $200,000, but $120,000 of that annual income no longer showed up on their tax return. The IRS knows they're receiving it, but it's tax-free in a 33% tax bracket. We save them $40,000 a year in tax based upon them living 20, 25 years. One of them will likely live that long. We save them over $1 million of unnecessary tax by doing a strategic conversion of that money in IRAs and 401ks to tax-free vehicles. So the answer is yes, you can convert and do that. You can change it to tax-free, but you're going to have to do it with a strategy to pay the least amount of tax and even maybe offset the tax by creating new deductions, because nobody likes paying any more tax than they have to. But if you do this strategy, it would increase your net spendable retirement income by as much as 50%, double, 100%. And there are stories in this book about how we've saved some people and tripled their net spendable retirement income. If you'd like a copy of this, you go to laserfund.com. I'll fire out a free copy to you. You just pay $5.95 shipping and handling. And I want you to learn and become educated and be empowered on how you can do this and save a ton of unnecessary tax yourself.